All right, so we just had a quick follow-up question to a previous video we've done, and the question was, can you roll closing costs into a loan? And whether it's a loan or refinance trip, what are some options if people are trying to minimize their out-of-pocket expenses for either?
For a refinance loan, generally we can roll the closing costs in, provided that there's enough equity in the home based on the appraisal. So we generally will look at it and try to balance it so that it's a cash neutral transaction. You might pay for the appraisal up front, and then you can get up to $2,000 back at closing, and it would not be considered a cash out refinance. It's still considered rate term, which allows you the most favorable interest rate and terms for financing, and we can generally cover all of the closing costs associated with that. For a purchase transaction, generally you can't roll the closing costs in unless you're looking at a few unique programs like USDA will allow you to do it if the appraisal comes in higher. But on refis, most times we are able to do that.
Here's what we can do. If you're looking to buy a house and trying to keep your out-of-pocket expenses to a minimum, we can actually generally negotiate where the seller covers the closing cost on your behalf. So that's something we can talk about through the purchase if you're looking to go that way. Hey, thanks for watching again. Make sure you click on that like, share, and subscribe for me. And Tripp, thanks again for your input.
Thanks for having me.